This week, we had earnings from both Netflix and Tesla. On today's video, we'll go through the earnings and point out some of the things that you may have missed. Next week, we are going to get earnings from the rest of these companies outside of Nvidia, including Microsoft, Google, and Meta on Wednesday. Join us for the live stream as we cover those earnings. And on the next day, on Thursday, Apple and Amazon report their earnings. It's going to be a big week coming up. We've got a lot of things to discuss, and we kick things off like we always do with Meta Platforms. Start of the week at 7:23 and heading into earnings next Wednesday. Meta shares up over 2% to finish the week at 738, giving the company a little bit of headroom over and above the 52-week highs, closer to $800, where I think this one can pop if they have solid earnings. Speaking of popping, you better pop in on Wednesday when we have our live stream on October 29th. Right at 1 p.m. as these companies are set to report. We'll go through all of the reports live, not on this channel. This is actually over on the Equity Empire channel. I'll try to include a link down below so you can tune in. Now, Meta is continuing the AI trend, and we're seeing more of this. In fact, the companies aren't hiding it. When we get to the Amazon segment, something very interesting as it relates to AI and robotics and jobs there. Meta is going to replace workers overseeing risk and compliance. My apologies if you are a recent college graduate and you want to get into risk and compliance because your job is going to go away. We often see this as well right before earnings. These companies start to make cuts. And so this is something normal, but what's interesting is Meta told employees Thursday that they were going to be let go because it had improved automation technology, which now allows it to deliver more accurate and reliable compliance outcomes. Basically saying, you suck at your jobs, humans, compared to AI. This is a story that is going to continue. They're going to funnel the money, though, into AI data centers. And this is one of the arguments that I've been making over the past several weeks. I'll continue to emphasize this point. Money that used to go to salaries of risk and compliance will now go into data centers. So you as an investor, your ears should perk up there. Instead of the money flowing to salaries, it's going to go into investable assets. And Blue Owl, their ears are perking up as they're partnering with Meta to bring a $27 billion data center online in the great Louisiana state. Meta launching these data centers with a mix of kind of a joint venture. Sometimes they own these data centers outright. Sometimes they are partnering. It's a good way to spread out the capital. Moving on to Apple, start of the week at 258. And again, Apple reports their earnings next Thursday. Shares climbed heading into earnings by about 1.75% to finish the week at 262.83. This comes as the company is starting to ship their American-made AI servers. And this comes ahead of schedule. This is according to Tim Cook. Company is making American-made servers in a Houston facility. These are to run some of the artificial intelligence and server-side stuff that Apple is not trying to push it into the public cloud. This headline is an example. If you were to tell somebody 2 or 3 years ago, would Apple be able to make servers here in the United States? Somebody would give you a canned answer like, oh, that's 5 to 6 years away. I remember when the CHIPS Act was moving its way through Congress and finally on the President Joe Biden's desk, people were like, this is still going to be 5 to 10 years away. Well, here we are. Apple is shipping American-made servers out of the great state of Texas. TSM has done a brilliant job scaling up American manufacturing of semiconductors well ahead of schedule. In fact, they're expanding the facilities in Arizona. So when you see people on TV give you just this blanket, oh, that's going to be 5 to 10 years for a nuclear reactor. It's going to be 5 to 10 years to learn how to mine. It's going to be 5 to 10 years before American can do rare earths. Just understand, when the pressure is on and when the money is behind it, things happen a lot faster than you realize. I think maybe the best example in more recent time were the COVID-19, we'll put this in air quotes, vaccines. At the time, people were saying something like that or a treatment like that was 5 to 10 years away. And then lo and behold, you threw a bunch of money behind it and a bunch of attention behind it, and the companies came up with something really quickly. Globalstar currently offers satellite connectivity to Apple iPhones. However, This is a company that I don't think the guy wants to own it. He's looking to sell the company for more than $10 billion, maybe even to SpaceX or one of these other companies. But it appears that SpaceX has a competitive advantage offering different type of cellular services through the satellite. Say that a few times fast on a Friday. They've partnered with T-Mobile and it appears potentially with Apple. It'll be interesting if Apple and Musk team up. What other things that could unlock down the road? The iPhone 17 is seeing healthy demand. I've seen this as well. I tried to get on and buy one of these damn things. They wanted me to wait a month and I said, no, thank you. However, the Air is not very popular here in the United States as we've seen the company potentially cut iPhone Air production. However, they have shifted some manufacturing to the other iPhone 17 models. What we saw, I think it was last week, is the Air is more popular in China. Also, from listening to some experts about Apple and who really study Apple, they said that the Air product was simply just a manufacturer prototype of the dual screen foldable phone to come. And so they wanted to scale up a version of the foldable phone in the Air format, getting those bill of materials, figuring out the manufacturing process. You should be able to sandwich together two iPhone Airs maybe as soon as next year. And that was the purpose of the Air. If it sells great in China, that's the icing on the cake. Now, a foldable iPad, which sounds like a MacBook, that might be delayed amid a development snag. I don't think a foldable iPad is going to sell very well, but I could be wrong. Moving on to Amazon. Start of the week at 214. This stock has been drifting down. We'll see it technically. It was kind of in a key area technically. It rebounded before earnings next Thursday, up over 4.6% the finished week at 224. It's critical level technically. Now, Amazon's robot army may be even bigger than anticipated. This is according to the New York Times that received internal documents over at Amazon that sees the company working towards automating 75% of the entire company's operation and remove more than 160,000 U.S. jobs that would have otherwise been needed by 2027. This makes me feel so warm and fuzzy inside. And I know some of you are cringing at the loss of these warehouse jobs or delivery jobs. I will remind you folks, this is the investor channel, not the we want everybody to have a minimum wage job channel. It is estimated that if Amazon is able to pull this off, it will save 30 cents off of every item that makes its way out of Amazon's warehouses. 30 cents off of every package off an e-commerce business, which is already profitable, would make it not only more profitable, but it would also make it even harder to compete against Amazon. As an Amazon shareholder, this makes me very, very happy. The company is aiming for faster delivery and cheaper delivery, potentially with robots in its warehouses and AR glasses on the road. I don't know if you see these really hardworking Amazon delivery drivers who are more contract manufacturers through a delivery service provider. But one of the hangups of their job is they've got to deliver these packages and then they've got to take a photo. If it's AR glasses, then the AR glasses already recognizes this is package on the ground, snap a photo. It would speed up their job and probably make it even easier. Amazon doing a smart thing with their NFL game on Black Friday. They're going to stream that game for free worldwide on that Friday. My guess is that Friday's game will be loaded up with sponsors trying to sell their stuff with Black Friday offers, but also Amazon can run its own internal ads for its own services and products during the game. This is why you buy the NFL, because you're going to have a lot of eyeballs on that Black Friday game. And if you air it for quote unquote free, well, you probably can run a lot of advertisement. Amazon Web Services, as many of you might have noticed, was struggling to come back online earlier in the week. It appears to be working decently now. Weight Watchers, which is still a public company, wow, it's a $31 stock. They're offering weight loss drugs, including the popular GLP-1s made by Eli Lilly and Novo Nordisk. I believe they offer from both companies through Amazon Pharmacy. So the way these GLP-1s work is unless you go to a normal primary care physician like you normally do to go to the doctor, if you want to do it online, so you go to Weight Watchers, you go to Noom, or you go to Roman, or you go to Hims and Hers, and then they offer you a prescription. Well, they can fulfill it at your pharmacy, but one of the easiest ways to do it is actually through Amazon Pharmacy, where they'll actually mail this to you for the lowest possible price, which is probably about $500 a dose, maybe even a little lower these days. I think Amazon's got a winner here with the pharmacy. They've just got to continue to deeply integrate it. We ran a story maybe a week or two ago where they had these automated things that distributed the medicine inside of the office. It's one of the best inventions I've seen in pharmacy in a long time. Moving on to Netflix. Start of the week at 12.17, and the stock decided to Netflix and chill all the way down to a day range low. In fact, you're sitting on the lows of the day at 1094 for Netflix, down another 1.7% to finish the week down 10%, well off the 52-week high. It's after the company reported their Q3 earnings, which came in line with revenue growth in the high teens, 17% growth, $11.5 billion. They missed on the EPS side based on some extortion or, a tax thing from the Brazilian government. Across the board, it was really solid. When you look at the growth rate across all of the regions, it was double digits. Look at Latin America. On an S neutral, it grew 20%, but including FX, it's down 10%. That's a massive fluctuations in the United States dollar against other currencies and vice versa. And so it impacts the earnings to a certain degree, but across the board, you had strong growth across all regions. They gave guidance that was decent enough. Operating margins, though, coming in a little light at just 24% in the upcoming quarter, and that is impacting the financials. You'll see year over year, things look pretty good. On this 17% revenue growth, we went from $3 billion up to $3.3 billion, or nearly that, on the operating income side. But you do see quarter over quarter, despite slightly higher revenue, you had a slip in margins from 3.8 down to 3.3. We're also getting a lot of verbiage around the ad business, the fact that it's growing and all those types of things, but we don't get any actual breakout of it from a financial perspective. Whether or not they end up doing that, I don't think they have to over at Netflix, but it's interesting that the ad business is scaling very nicely, at least from what they tell us. However, the margins are slipping over at this company, and so that does have some investors concerned. However, it could be quelled, I think, in the long term, given the fact that this is essentially a software company that has software type economics. Off of $2.8 billion of operating cash flow in the most recent quarter, they basically don't have to spend it on anything. So that gives the company a massive amount of money from a percentage basis off of the operating cash flow. What did it do? Off of $2.8 billion of operating cash flow, they bought back nearly $1.9 billion worth of the stock. Now, I think they have a $10 billion authorization. Looks like they've carved through maybe about $7 billion. My guess in the coming weeks, what you'll see with Netflix is an increase in the buyback, unless they want to go and bid on the Skydance Paramount assets. But my guess is you're going to have the increase to the buyback, and the more the shares decline over at Netflix, well, the further that buyback goes. Moving on to Nvidia, start of the week at 183. This one drifting higher. It's the one company out of this group that doesn't report earnings. However, we heard from Supermicro and Intel this week, and Nvidia just happens to own a stake of Intel. Shares of Nvidia up 1.7%, finished week at 186. Semiconductor sales, according to Bank of America, could approach $1 trillion by 2027. The previous estimate was for $860 billion. This is what I'm seeing across the board. This will likely lead to revenue upside, not likely, it will lead to revenue upside for Nvidia, AMD, and Broadcom. One thing that I'm not 100% sure how the market will handle is the different types and the quality of revenue. We know with Nvidia, we know with Broadcom that the revenue coming into these companies from these servers and these GPUs and the custom GPUs, it's going to be very high margin. When AMD has reported earnings, and certainly their deal with OpenAI was kind of dilutive, I'm not exactly sure. They're certainly not going to have Nvidia type margins. They might not even have Broadcom margins. Where are those margins going to be, and how will investors digest it? It's hard to say, but the thing that is certain is that these companies will have massive revenue upside, these three in particular. Now, It's not flowing down, though, to Supermicro. Company always gives its results early, and shares dropped by over 4% as they miss sales estimates by $1.5 billion. This is a case of a company that doesn't have good management, that is not guiding the street, that is not setting expectations, and this is what you have. This is also an example of a, quote, semiconductor company. It's just really a contract manufacturer that doesn't have a competitive advantage and can't squeeze out high margins. In the long run, in the data center and semiconductors, you want to gravitate towards revenue growth and margin. Nvidia being kind of the shining example of that, and Supermicro being one of the crappiest. Now, speaking of a company that was once crappy, Intel Corporation also reported their Q3 earnings. They had revenue growth, and I don't have the financials here. We did a full breakdown on the premium side, but Intel finally is squeaking out an operating profit. For many years, most of you know, I completely trashed Intel all the way down on the stock price. You stretch it out to a 5-year chart. I trashed this company all the way down, and I could have continued to trash the company and continued to make videos, but instead, in January, I said I had 3 reasons why I was going to buy Intel, and let's just say I bought them myself, and shares have basically doubled. There's still a lot more upside into Intel, but we'll save that to the premium side. Now, moving on to Google, start of the week at 255. This one bouncing around as we're heading into earnings with Google on Wednesday, up 1.8%. Don't forget, I have a live stream on Wednesday when Google reports. Now, Anthropic, big deal for Google, big deal for Broadcom here. So listen up. Anthropic and Google were said earlier in the week to be negotiating a multi-billion-dollar cloud service agreement, and it turned out to be true. This is not just for cloud services. This is using Google's custom-made TPUs, which are made in partnership with Broadcom. This is for Anthropic to use up to 1 million of these things, and this is significant because the company is also relying on Amazon as well and some of their custom silicon. Anthropic seeing so much demand that they've got to come to Google, which is also an investor in the company, and they're going to use this. This is key for Google because in the past, just even maybe upwards of a year ago, or maybe even 6 to 8 months ago, this company was not finding uses or wasn't even leasing out the access to its TPUs. If you were on its cloud, you had a little bit of access to TPUs. Now it's finding a way to monetize these, not just in its own internal services. Obviously, Google's using TPU for YouTube, for search, for maps and docs and all this stuff. But now they're finding new use cases in external customers. That's great news for Google. Google CEO saying that they have a quantum chip, which was codenamed, I think, Willow. This might be a slightly different one. This has achieved the first ever verifiable quantum advantage. Now, I'll be honest with you. I've only done 15 minutes of internet research on this. I've read through the Google blog. I need to read through the magazine in which this was published in as well. I need to do more than 15 minutes of internet research. I need to do close to 30 to 60 minutes of internet research on quantum. My view is still that this is, a multi-year process to get these out there, but there's companies doing exciting things, particularly Google and IBM on the large cap side. Now, moving on to Microsoft. Start of the week at 514. This one drifting higher into earnings. Again, on Wednesday, I've got a live stream on Wednesday where we'll cover Microsoft's earnings up to 523 before earnings. OpenAI launches ChatGPT Atlas, which is a browser that was expected to challenge Chrome. Now, I downloaded ChatGPT Atlas. That is because I'm on the Mac OS, and that is the only thing it's available for. Now, it's not a traditional type browser which lives on your hard drive. It was one of these more like internet applications. It's not going to challenge Google Chrome. Not in the short term, not in the long run. Will turbo dorks and turbo users of ChatGPT find the browser useful? Probably, but I agree with HSBC that the Atlas browser is not a threat to Google. I'm used to ChatGPT shipping product which blows the doors off of things. The browser was just more or less, in my opinion, a skin for what ChatGPT will become in the future. President Trump weighing some kind of export control to somehow include United States software. I'm not exactly sure how this will work. I don't think anybody really was sure, President Trump often floats these things out there. And some people say, that's not transparent, or President Trump's not transparent. I would actually argue this is kind of a transparent way to do things, is he often floats these things out. He did this with drug pricing. He did this with semiconductors. He's done this with a couple of different things. So he floats these things out there, then forces maybe the software companies to come to him and negotiate. And we can argue if that's a good thing or a bad thing, but that's the process that you are under. And you can argue if it's good or bad as an investor. You just have to focus on what the process is. Now, complicating the situation is China and Trump are set to meet, I think, in just a week or two. And so I think a lot of this is just jawboning, and we'll see where things head in a week or two. This is all stuff that can impact the market. If you were to ask me which way Trump is going to go one way or another, I think he's going to do his absolute best to work out a deal with China, which would broadly be decent for the markets, if not absolutely fantastic, depending on the nature of the deal. However, obviously, there's probably a 60, 70, maybe even high as 80% chance of that being the outcome. The rest of the outcome is a disaster where he gets completely turned off by China or China gets turned off by him, and then things go in a tailspin. We'll obviously keep an eye on that. You want to have your risk management levels in check if you don't want to wake up one day and see your account really down. Now, Microsoft is telling its Xbox unit, which includes both the Xbox, the actual physical console, but also kind of the games, that they need to run above an industry average in terms of margins. According to S&P Global, the average profit margins of the video game makers in the industry average between 17 and 22%. Microsoft has set an across-the-board goal of 30%, 30%, so near double kind of even the low-end average that you're seeing across the game makers. Now, this caused studios to fire people, to cancel projects, and really start streamlining the industry. I think one way the industry will advance in terms of a margin perspective is through AI. I think we've just started to scratch the surface in terms of the capabilities of AI and its ability to design and build games. In the future, it'll be the starting point. Now, this company showed off Micro, which is a different name for its Copilot, to make it more friendly and have a new character. So apparently maybe people were not happy with Copilot and they needed to rename it and rebrand it. Now, moving on to Tesla. Start of the week at 443. Company announced earnings. Shares dropped down to the lovely 420 area and have bounced back. And basically, I don't got my percentage here, but they were down about 2%, finished the week at 433.69. Now, company reported the Q3 earnings. Revenue growth was strong in the quarter, 11.6% growth. Revenue came in at $28 billion. One thing that I talked about on the premium side was we actually pulled up the Tesla website. And what I am seeing is, yes, you had those $7,500 tax credits, which expired, which pulled forward a lot of demand for cars. In fact, I bought a Tesla before that expired. It was a decent enough, we'll put this in air quotes, a decent enough deal to take advantage of. However, if you're on the Tesla website, what you'll notice again is that a car for most people is a function of payment. It doesn't matter if the car's $40,000, $50,000, $60,000, or $70,000. It's really more of a function of payment. And with Tesla, what I noticed is through their lease offers in particular, there wasn't a big difference between the price that you pay now versus what you paid before the $7,500 tax credit. And that's even factoring in the same type of money down. That's likely going to mean that Tesla's margins are going to compress even further. And here's the deal with Tesla. And this is something that we've known for several quarters now, if not for several years now. The automobile business is exactly what we thought it was with Tesla, is that it's a very low margin business. Off of $20.4 billion worth of revenue on the automobile side, they had $17.4 billion. Now, there's going to be some of you that are going to waste air and waste heartbeats arguing that a company in the automobile business should not be trading at 272 times forward. And everybody with their head screwed on straight would absolutely agree with you. However, that has always been the case with Tesla for the entire history of the company. The other thing that this company has that other automobile makers don't have is an energy and storage business, which churned out $3.4 billion worth of revenue versus about $2.4 billion worth of cost. And so this is a very nicely scaled up business that is generating profits. They have a software business on the full self-driving. They potentially have robotaxi. They potentially have Optimus as well. I know there's a lot of potential here, but potential often gets a very high PE. The other thing that doesn't get talked about enough is that this company does not have an automobile maker's balance sheet. In fact, it's one of the best balance sheets that you will see. If you removed Tesla's logo from this balance sheet, and then therefore removed some of the cognitive biases that a lot of people have around Tesla, whether it's positive or negative, if you just looked at the straight numbers at this company, you will see that they have $41 billion worth of cash. Total liabilities, every liability that the company has, sitting at $53 billion. This is a very financially healthy company from any metric, particularly from a manufacturing and the automobile business. So what does this mean? Tesla has the ability to fund its potential, which is not the case if you're going down to quantum stocks. It's not the case if you look across the wide spectrum of stocks out there that are in these up and coming autonomous vehicles, robotics, these types of businesses. Oftentimes they're funding these things with debt and fundraising. Tesla doesn't have to do that. And on top of that, they've proven time and time again, not always on the right timetable, but usually from the product side, this company can actually deliver. Moving over to the technical segment of the show, folks, makes me feel so good on this Friday when the technicals line up this perfectly. It just makes me feel so good. It's like the birth of my son, the smile of my wife in the morning. This is what you dream of. You broke, and again, we're looking at a micro trend here. Long-term trend or intermediate trend with the S&P 500 is basically straight up in the air. The long-term trend, I mean, obviously it's higher. We're looking at kind of the micro trend since coming out of those April tariff announcements. You are in a very well-defined uptrend. You broke through that trend. And what did I say on last week's show? That you don't take off the trend line when you break, because often what happens, you come back and you do a back test. Now it's decision day for the technical analysis. Does this continue to move higher? I mean, you essentially confirmed a new higher high. You could get rejected here. It's not that big of a deal. You've got earnings from big tech next week. That'll move the markets. You've got the China negotiations. That'll move the markets. The good news is, even if you were to break here, it will give you the opportunity to buy the dip in a uptrend. That is exactly what you want to do. And it converges with the 200-day moving average, which is this squiggly thick blue line. That's also where you want to buy. Meta, setting up right in the middle of the channel heading into earnings. We haven't done that often with these stocks, if my memory serves me correctly. Company reports their earnings on Wednesday. This gives it room to where if the earnings are decent enough, you could easily come up here and make a new higher high at 800. If you get rejected here, I mean, any small rejection in Meta is a buying opportunity next week. Apple created a new higher high in the chart. This is beautiful. You have your breakout with Apple. Now the question is, can you break out and really push up into maybe the $300 range on this one? Or will you hover here and then maybe make a softer pullback? That's what we're waking with Apple. And we'll get news from them next Thursday when they report earnings. Speaking of Thursday and earnings, Amazon reports their earnings, and they are just bouncing on this 200-day moving average. You see earlier in the week, company sat on this 200-day. Well, this will be a key level when we look at Netflix here in a second. Stocks tend to come into the 200-day and want to bounce when the 200-day is positive. When it's negative or rolling over, you tend to slice through it like you did back in this area. But this is a positive 200-day, and it served as support. When Amazon reports earnings, a dream scenario is you push back up into the 240s. The other scenario is you push back into resistance at 238. Pullbacks on this one should be bought rather aggressively. Netflix reported earnings, created a gigantic gap in the chart, and it kind of gapped and crapped. You are wicking through the 200-day moving average on heavy volume. This is where Netflix better turn around. It would be surprising not only to me, but many people if the shares of Netflix do not find footing here. Now, footing does not mean that it just bounces like a basketball and goes higher. We could consolidate in this area, but what would be very surprising is if Netflix just keeps putting up red candles all the way down. That'd be very surprising and very, very, very bearish for the shares, as you don't have support, really clear support, probably until you get back into the 950 range. So you want to plan accordingly from a risk management standpoint. Nvidia broke to the upside, broke back down, but we are now just hovering at these highs as this one doesn't report earnings for another 25 days. It will continue to hang out. We'll get CapEx read from Google, Microsoft, and Amazon next week. That could be enough to send Nvidia higher. Moving on to Google. Just confirmed a beautiful higher high on this one. This one, unfortunately, heading into earnings, is setting up at the top of the range. I say unfortunately, it's actually not that bad because it's going to take a lot for Google to report earnings and push this up into the 275, 280s, 290s. It'll take a lot for it to do that. More likely, it's like kind of a Netflix situation where it's good numbers, but nobody cares. Pullbacks in Google, particularly back into the low 200s, is very, very exciting. Now, Microsoft created this breakout kind of channel, and then we've now consolidated, looking very much like kind of the Oracle chart as well. This one's sitting not technically in the middle of the range, but you're sitting probably about halfway from the highs and about halfway to the 200-day moving average, whichever this one breaks. I think if it breaks higher, you're not really doing much with it, but if it breaks lower down into the 470s, that creates opportunities. Microsoft reports their earnings on Wednesday. And then finally, Tesla. Lot of technicals being created with Tesla. We've created kind of this pennant formation. You tend to resolve out of these things one direction or another. I'm not breaking news that this thing is going to go higher or lower. However, you tend to break towards the dominant trend. Not all the time, but you tend to break towards the dominant trend. Here's another example of this. You created this exact same pennant formation. We'll change these to orange so you can see them a little easier. You created this same pennant formation. This was back earlier this year. In fact, I think we pointed this out on the show. You created this pennant formation, and then what happened? You resolved and you broke to the upside. Doesn't always break, and I'm sure somebody that's like well more versed in technical analysis knows maybe closer to what the probabilities are. When you create these pennants or P formation or flag formations, there's a number of different kind of technical names for it. There's probably some probabilities that tell you which way they break. I just know in general, if the 200-day moving average is positive and the general direction of the trend is positive, they want to break higher. You have a shareholder meeting coming in a couple of weeks for Tesla. They also announced that they are likely shipping prototypes of their Optimus robot in the first quarter. That probably means the third quarter if you go on Elon Musk's timelines. But we'll see if that's an event-moving type thing for Tesla. It has been in the past. Folks, that was the FAANG Stock Recap Show for Friday, October 24th. I do want to dedicate this show to Mr. Daniel Naroditsky. He passed away this week, and he's somebody that has entertained me greatly when the end of the day comes and I need to turn off my mind and turn off my brain and go to sleep. One way I did that was watching his educational videos about the game of chess. The game of chess will miss his commentary and his contributions, and my thoughts are with his family and friends and the community. The other thing that I want to say is we have kind of a weird relationship here on the FAANG Stock Recap Show. I sit here in this room by myself and essentially talking to a microphone. You sit on the other side and you consume it, and that's how we have this relationship together. Even though it's somewhat awkward and it's different than kind of a human face-to-face, what I want all of you watching this to know is how much it means to me that you watch. And even though we have this type of a relationship, which is through the internet, and sometimes a lot of us won't ever interact, you are as big a part of my life as anybody. And I just want you to know, no matter what you're going through, no matter what's happening in your life, just know that I appreciate you and I consider you a friend, and you have done so much for me, and I care so much about all of you. I hope you all have a safe and fun weekend. We'll see you again in 7 days here on the FAANG Stock Recap Show. If you want to join our live stream, we'll be live on Wednesday just after the close at 1 p.m. Pacific time. We'll see you again soon. Good luck with your investments.